Alright, so I'm pretty sure in this video I'm going to be talking about consistency or giving you guys some advice and tips on how to actually be consistent. So this is going to be probably the hardest part about trading Forex. Learning technicals is not very hard, right? Anybody could pretty much learn technical analysis if you're really dedicated and determined to learn it, especially in this market, right? So first of all, you have to understand trading is 80% psychology. And a lot of the times when you take a trade, you know, your emotions spike up, right? And that's something you have to control when you're actually trading. Being able to control your emotions is going to help you a lot. And knowing that, you know, you're not supposed to be connected to the money when you're trading will definitely help you out as well. Now, what exactly do I mean by, you know, your emotions and trading? Okay, so let's put one thing in mind. First of all, you're not supposed to predict the market, right? So overall, right now, this pair is XRP USD. Okay, so let's say you were gonna enter a trade, right? Let's say you enter a trade right here after this variation form. You know, you had a cross of moving averages, so you say, okay, I'm gonna enter a trade. You say, okay, I'm entering a trade, and you decide to enter right there, and you put your stop loss above previous resistance right here, and your take profit is right there. Okay, so you're not going to get a perfect entry every single time you're trading. Keep that in mind, right? So there's a couple things you want to do when you're trading. Obviously, never counter trend, right? You always want to follow the trend and look for a trend continuation unless the market changes in trend, right? So another thing you could do is the 3-strike rule. So let's say you take 3 trades a day, right? First trade, you lost. First of all, your risk management needs to be on point, right? So this is a 1 to 3 risk reward. So you're risking about 75 pips for an overall 133 pip gain, right? If you want to take that, then if you want to take that trade, then that would be on you. Okay, so you always want to make sure your risk would be a lot less than your potential reward, because the risk can be predetermined, but the reward is unpredictable, because you never know how much you're actually going to make in a trade, right? Just because you set your take profit at one area doesn't mean it's going to hit that area, right? You could have had a negative 27 extension level that's way down here, but you don't know if the market's actually going to come down here. It could completely reject the support and go in the opposite direction, right? So that's why you always want to be a follower in the market and not a predictor and try and predict where the market's going to go. Okay, so back to the 3-strike rule, like I was saying, right? So let's say, let me do this. Let's say you have a risk of 15 pips on this trade for a reward of 30 pips. Okay, so let's say you lost this trade. Now you're down 15 pips. Now let's say you take another trade, right? And always, whenever you're taking trades, you want to do it within a certain amount of time. You don't want to do a trade back to back. Like you close this order and enter an order on the opposite side, because then that's just bad psychology. And on top of that, that's most likely revenge trading. Okay, so now let's say this one you're risking about 5 pips for an overall reward of 30 pips. Okay, so let's say you won this trade. Okay, now you made back what you lost on this first trade and a little bit of profit. You've made probably 15 pips, and let's say you take one more trade for the day, then you have a reward of about 10, or a risk of about 10 pips, same reward, 30 pips. Okay, so, and let's say you won this trade. Okay, so now you've profited 30 pips on top of your 15 pips, so overall you've profited 45 pips for the day, and using the same lot sizes each trade, right? So that's one thing you could do. Now let's say you lost this trade. Okay, so once you lose your second trade, you could pretty much be done trading for the day, unless this trade is, you know, obviously gonna pay out what you lost here and here. You know, it's definitely possible. Okay, so at most you trade 3 times in one day. All right, this could be used for scalping and intraday trading, swing trading, whatever. Okay, so what are these? All right. So on top of that, to actually be consistent, you have to have a set of rules for yourself, and follow those rules are the most important thing. You have to be extremely disciplined when following those rules. What do I mean by that? All right, so let's say you're not going to enter a trade unless this, or this happens, right? Now you can have multiple scenarios, right? What do I mean by that? Okay, let's say my main analysis is based off of the hour time frame. We're at support. I'm expecting the market to go up, right? So I'm not going to enter a trade unless one, M5 or M15 break structure, right? So let's say M5 break structure, EMAs are already crossed and it's making higher highs, higher lows. Okay, I'm gonna wait for a cross of EMAs on M15 and then I'll enter a trade and look for a continuation on the trend reversal, right? Because if you're entering based off of the lower time frames, right, you're looking for market structure on the lower time frames, and that'll be overall direction for the higher time frames, right? So within all of these candlesticks, you're going to see higher highs and higher lows on M15, right? Higher high, higher low, or I am so sorry, lower highs and lower lows, right? So lower high, lower low, lower high, low, high, lower low, lower high, low, lower high, or high, and then a lower low, right? So you're going to see market structure, but overall direction is bearish on the hour time frame. Okay, so lower time frames is for market structure, higher time frames is for direction, right? So you're going to be entering on one of the higher low points once the market has previously broken structure. So you would be looking for a continuation, right? So having a set of rules is extremely important, right? Risk management, right? I'm not going to enter trade unless my potential reward is a lot bigger than my potential risk. Things like that will definitely help you out. You always want to make sure your winners are bigger than your losers, of course. That is a huge thing, because let's say in 2 trades I ended up losing maybe $400, right? But in one trade, you know, I end up making $1,000. Then, you know, I made back the 400 plus I profited $600 for the day, right? And there's lots of things that can go into play, like, you know, you could set yourself, okay, each trading day I want to make X amount of money, and once you hit that goal, just walk away from the market. Just simply walk away from the market, but still following every other rule on not entering unless this and that happens, right? Unless your rules come into play and you're disciplined enough to actually follow your trading plan, right? So let's say you want to make I don't know, maybe $400 a trading day, because your account balance, definitely with the lot sizes, you know, will help you out, right? If you have a bigger account, then you could use higher lots, catch less pips, and it's easier to reach your goal than having a smaller account with smaller lots, and you know, you have to catch way more pips. It's going to be a lot harder to reach your goal, right? If you throw 1 4 lot, catch 10 pips, then you've already reached your goal. Okay, so now on top of that, another thing you could do is to always be consistent, right? Let's say you enter a trade and you're in profit 10 pips, move your stop loss to break even immediately. And then once you're in profit 20 pips, and move your stop loss to 10 pips and have a trailing stop, something like that. All right, so now let's say, going back to this, right? Let's say you want to make $400 a trading day. There's normally 5 trading days within the week, right? That's about $2,000 profit at the end of each week, and at the end of each month, you're looking at about $8,000 profit. So you'd withdraw 50% of that to your bank account, and then leave 50% of that into your broker account, just to keep growing your bank account and your broker account at the same time, right? So there's a lot of things you can do for consistency, but a lot of the times it's mainly psychology, risk management, and being disciplined, right? So obviously trading experience will help you out with that, and overall, you know, evolving as a trader is an extremely important thing. So you being consistent isn't really something I can personally help you out with. That's something you have to help yourself out with. Obviously, I just gave you, I guess you could say, tips on how to be consistent, right? But overall, consistency comes down to you. Following your trading plan, following your rules, definitely help you out a lot, and especially being extremely disciplined. All right, so I don't know what else to talk about. This was brought to my attention, so this is going to be the psychology portion on the trading course, I guess you could say. Like I said before, you know, I gave you a trading style. This platform is used so you guys can learn a trading style, right? But having your own trading plan, that's all on you, right? Because you need to evolve as a trader, right? I'm just helping you out as much as I possibly can, because once you're done with the course and you learn your technicals, then, you know, learning to be consistent and the psychology portion, that's most likely all on you. Of course, I'm going to be adding, you know, things you could do to improve your psychology on the course within time, but overall, it's all on you. So hopefully you guys did enjoy this video, and let me know. Of course, I've been getting a ton of emails from you guys with questions and stuff, so I'm currently getting back and replying to most of the emails. But yeah, like I said before, if you have any questions, email me.